Good afternoon and welcome to NYFP. This afternoon I'm joined by Kenneth Polcari of ICAP. Hi Kenny, thanks for joining me today.
You're very welcome. Thanks for having me.
Well, in today's session, oil and stocks are selling off. Do you think the trend we're seeing both in equities and oil is here to stay?
I think it's here to stay for a little bit. I think, the market has got to, I've been a little bit of a bear. I think this is perfectly normal. I think the relief rally we had on Tuesday was just that, a little bit of relief and kind of anticipation of what may have come out of not only Greece, but out of Bernanke yesterday. And in fact, he, after his conference yesterday, he left kind of a not so good feeling with the marketplace, right? So today the market, in fact, is taking that news from yesterday, following up on the sell-off from yesterday, the negative comments coming out of Europe over the night, out of Trichet, with the real concern over this European debt crisis, spinning out of control if, in fact, they don't get a handle on it. Certainly not helping the market at all, certainly not helping the sentiment at all. And I think Bernanke left the sense that, he acknowledged, and he had to, that we are in a tough time at the moment, because had he not acknowledged that, people would have started ignoring him, because we all feel the tough time we're in, and for him not to have acknowledged it would have been a mistake. In fact, he did acknowledge it, so that's good. But the fact is, now that he acknowledged it, the investors are starting to reassess where we need to go.
And indeed, Kenny, Bernanke does not hold the golden key for the solution to the economy, and the Fed did cut the growth forecast. But tomorrow we do have GDP figures coming out here in the U.S. How do you think those numbers will affect the market, if at all?
Listen, they already started to cut that GDP number, right? Goldman and some of the big investment banks last week, in fact, started to cut that number. So I think the market is prepared for that. The fact that Bernanke yesterday now also cut kind of the forecast, that's what the market's telling you today, is that, it's taking all that into account. I am, though, concerned what that ultimate number is going to be tomorrow. 1.9 is the expectation, 1.9%. If it veers away from that by much, then and misses it, then this market's in for a little bit of further testing to the downside. I would be concerned if we break the 200-day moving average, which has been support here. 1262 right now is that number. We pierced it a little bit this morning. We rallied right back. If we go into the afternoon and the market gets weaker, then you can expect the selling to pick up.
Well, last but not least, before we wrap it up, crude oil has also broken below its 200-day moving average in terms of price action. And in terms of sector, we've seen energy shares lower as well as airline stocks higher. So do you see any opportunities here in terms of sector?
Well, clearly with oil breaking down, there's going to be a lot of opportunity in maybe some of the transport names. Certainly the airline stocks are going to benefit. Transport stocks would benefit, I would imagine, right, from a weakening price in oil. So I would continue to play the dollar's rallying, which is causing, some of the commodities in oil to certainly back off. I would expect that oil's going to find a base right here around 90 bucks, which is where it is, right about 91, I think is where it is. I would suspect, unless we have a real meltdown in terms of the economy, that oil's going to find some support right here at this level. So I would actually start to look at oil again as maybe an investment, depending on, let's see how the rest of the day goes.
Okay, Kenny, as always, thank you for your time and thanks for all your insight.
Thanks for having me.